Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Ryan Detrick, chief market strategist at LPL Financial, to discuss how stocks performed under President Trump, policy shift expectations under President Biden, and what's in store for earnings. Ryan, it's great to see you as always. Welcome back to Trade Talks. And 2020 was unprecedented in many ways, and market performance was one of them. If we look at the full 4 years of President Trump's administration, how did stocks perform on balance?
Well, Jill, I mean, honestly, overall, really well, right? If you look at the Dow, and I use the Dow because we've got data back to the 1900s on the Dow. The 4 years of President Trump, there were 126 new all-time highs on the Dow. It actually was more than President Obama had at 123, and the second most new all-time highs ever. Bill Clinton has the most ever, well over 200. But on an annualized basis, stocks did pretty well again. He was actually had the best return to a Republican president since like the Roaring '20s. Okay, now in terms of total returns, though, President Obama was a little bit better on an annualized basis, and Bill Clinton was as well. But all in all, I think you'd have to say for investors, it was an interesting 4 years. We had a terrible pandemic with a 34% correction last year. But then stocks bounced back and still gained 16%. So all in all, it was successful for investors, I have to say.
I'll take those returns. What economic lessons were learned in 2020?
Wow. I think kind of combining the economic lessons with the stock market point of view, the stock market's a forward-looking mechanism. As terrible as a lot of the economic data was last year, it's not about good or bad. It's about better or worse. And the stock market's looking forward, I guess you could say. And we all knew that a year ago this time. But last year really reminded us, and people were looking around like, how can a million and a half people be filing for initial jobless claims, yet stocks are up and making new highs? It's because they were seeing likely better times ahead. At the same time, along with the economics point of view, the old saying, don't fight the Fed, right? I mean, stock market got killed. We know that. The economy slowed down. The Fed did a lot of things to grease the wheels, get confidence and liquidity back. And that's still in play as we head into 2021.
The most significant policy shifts with the Biden administration will take place around taxes, regulation, and stimulus prospects. What are you looking for there?
Yeah, we don't see any higher taxes this year. We think that's a 2022 story. Obviously, there's more regulation coming. I mean, it's already starting to a degree. But let's not forget, Senate's 50-50. And right now, there's an 11-seat majority for the Democrats in the House. I mean, that's one of the smallest we've seen in over 100 years. So there is still, yes, there's definitely Democrats of power, no doubt about it. But there's a lot of potential for gridlock. And we've talked a lot before about how gridlock can be good. The sways majorly one way or the other likely won't take place. And that's a big reason we think stocks have had such an unbelievable rally, the last couple of months, is realizing there is a little bit more gridlock there than what the headlines might make it sound like. But at the same time, I hate to make it sound like Goldilocks. Some people have said it's like a Goldilocks scenario. But you've got the checks and balances, but everyone agrees we need more stimulus. We're probably not going to get $1.9 trillion worth of stimulus in this next package. We think over $1 trillion makes sense, though, and there's another big one coming later this year, but that's when they're going to introduce likely higher taxes. So we'll see how that goes. But all in all, some interesting things taking place, but still some positives, no doubt.
That's for sure. And of course, the crystal ball question, what could some of the potential impacts be to stocks, fixed income, and the US dollar?
Yeah, overall, LPL research coming on to you for a while now. We've been saying we like stocks over bonds. We still feel that way with all the monetary policy, all the fiscal policy. Look at earnings, right? I know earnings season just started. I mean, most companies are just crushing earnings expectations. Look what Netflix did the other day. I mean, that's a reminder at the end of the day how earnings are doing drive things. And believe me, you see the initial jobless claims. There's still a lot of issues that are out there, no doubt about it. But corporate America has really rebounded much faster, honestly, than probably anyone was expected this time 6 months ago. And that should help the stock market, where we see a little bit higher yields as the economy does better. That might pressure bonds a little bit. The US dollar, we're in the camp, I think, like everyone else, with a weak US dollar. It does feel a little crowded now, though. Maybe a little bounce in the dollar, but bigger picture 2-3 years from now, we think with the Fed and all the policies out there, dollar's probably still headed lower longer term.
And this is a great way to wrap this up. Let's talk about earnings. Do you think the earnings recession is likely over? Because we have to be able to justify these valuations at some point besides the post-COVID-19 recovery story.
Yeah, I mean, this upcoming year, 2021, absolutely. U.S. earnings are supposed to be up about 22%. We wouldn't be shocked at all if they can hit 25%. Emerging markets are looking at over 30% growth. The fourth quarter, we came in expecting maybe down 7 or 8% year over year. Now we're saying there's, the old Jim Carrey quote, right? You're saying there's a chance. There's a chance maybe we can have break-even earnings in the fourth quarter, which is amazing. But again, the market is looking forward to the big reopening as the vaccines and everything hit, and the second half of this year should be explosive earnings, as again, it's easier when you compare, versus last year when things really slowed down. So it should be pretty impressive.
I think the Dumb and Dumber reference made you my favorite guest. Ryan, as
well,
always, it's great to see you. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.